Good morning. Today is Friday, April 28th. The time right now in Kuala Lumpur is 11:02 in the morning. And overnight, we have quite a big move on Wall Street. Last night, we have the release of the first quarter GDP for the United States. Market was expecting a release of 2%. Now, when you compare that to the third quarter of last year was 3.2%, and Q4 last year was 2.6%, and the market was expecting 2%. So we are expecting a decreasing economic activity over the last 3 quarters. But what was released was a shocker. Okay, it came out at 1.1%, so it's about half of what the market was expecting, and that caused a lot of volatility in the marketplace. And on top of that, we have the release of the PCE, which is the personal consumption expenditure number. The core number came in, market was expecting something like 4.7. It came in 4.9. So we can see that is an increased inflation, decreased economic activity. So what we are technically looking at is a potential deflation. So deflation, I've always maintained, has been a lot more problematic than a simple recession, because we have lower economic growth but persistently high prices. So if the US is caught in deflation, it is going to be very difficult for you to get out of a deflationary cycle. But the market took it very differently. Market, all they see is that, okay, last month we have a banking crisis caused largely by very high interest rates. Okay, so now with the latest GDP numbers for the first quarter of this year, it shows that economic activity has slowed down, and if we continue at this pace, very soon the US economy is going to go into a recession. So they say, okay, you have broken the banking system. Now it looks like the real economy is also hurting because of high interest rates. Maybe the Federal Reserve, when they meet next week, which is going to be scheduled on May the 2nd and the 3rd, before last night, the market was expecting maybe the Federal Reserve will hike interest rate by a quarter basis point. Maybe you say that 0.25, but now they look at this number and say, oh, maybe the Federal Reserve may not have the room to further hike interest rates. Maybe they should pause, and some even speculate that Federal Reserve may actually do the unthinkable, which is to cut interest rates, and that being the reasoning causes equity prices to zoom overnight. Okay, so basically overnight we have a massive run up in equity prices that caused all three major indices to rally. Okay, now it seems that the momentum behind last night's rally may continue into at least in the early part of tonight's trading, and then we'll see how it grows by the end of the session in New York by tomorrow morning, our time here. So over in the Dow Jones, you can see the market actually went to as low as 235. Okay, 33,235. Sorry. Okay, to a high of 33,834.5 overnight. So you can see there was a massive run up at about 300 points in one single night. So that is a big move. Okay, so will the momentum that we see overnight continue to extend higher? I would think so, because technically the momentum behind it looks very, very strong. So there's a very likelihood tonight we will see, at least in the first half, an extension of this run. Whether it can maintain it and is another story. The first barrier to higher prices will be 34,406 in my opinion, and whether it has enough momentum to go up beyond 34,712, I do not think so, but again we will have to see. Okay, over in the S&P 500, we also saw similar move from a low of 4,049 to a high of 4,138. So you can see there is a big move, less than 100 points, but it's still a very large move. Now the price is just at the edge of this zone, which I have previously mentioned is going to be an area vulnerable to selling interest. The area is 4,140 to 4,194. Okay, we will see whether there's going to be any reaction this time. Like the first time the market went up to 4,169, it has a sell-off of more than 120 points from there. But again, this time we are not so sure, because the momentum behind it is pretty strong. And if it can break above 4,169, of course, 4,195 will look a little bit vulnerable. It may be exceeded. Again, we want to see how it reacts. If the market punch through this level but could not sustain and close back down, that will be a classical reversal signal. We will have to watch. Okay, in Nasdaq, I think this market is getting ready to fly. Okay, because we can see just last week on Wednesday, we can see market actually attempt to take out the year high at 13,204, fail, This time, last night market tries again, and I think this time it will be third time lucky. It is probably able to break above 13,204 this time. How high it will go? Let's see. Okay, this is the last August high at 13,720. So this will be a reference point. If the market goes beyond this level, the next area I think the market may actually hit a brick wall. It's going to be 14,135 to 14,710. Okay, so this area is going to be very, very interesting. We'll see what happens there. Okay. Over in Asia, we can see that because of the strong showing on Wall Street, Nikkei has actually went higher. Now, basically going into this week's trading, I actually went short on Tuesday. Okay, as the market goes up into the marginal high for the year at 28,806 and come back down with a reversal signal, I went short here, and I have since placed my stop loss to break even price. So this morning, as the market zoomed higher, I will stop out of my entry. So now I have no position in the Nikkei. We will see what happens next. Okay, I would love to sell back if the market allows me. Okay, so right now we will see whether the 28,806 is going to be able to stop this rally. Okay, over in the Hang Seng, we can see that the price in Hong Kong, the Hang Seng index, actually has also a reaction to the upside, but it looks like 2 hours, 1.5 hours into the morning trading, it seems that it doesn't seem to be able to hold. Okay, so this is problematic. Now remember, Hang Seng went up to a high of 20,864.7 2 weeks ago on the back of higher than expected GDP numbers for Q1 of 2023. On top of that, they have very strong, robust retail sales in China, and that was the peak. Since then, their market did not follow through. In fact, it has actually gone the other way, down to below 20,000 to trade to as low as 19,520. Now, this reaction rally that we saw overnight this morning somehow does not make it right. Okay, if the market has at a high of 20,864 is based on a superior GDP release for Q1 on top of robust retail sales, theoretically it should continue higher. Okay, but the Hang Seng did not do that. In fact, it has dropped more than 1,000 points below. Okay, and now we have somewhat follow through buying from New York itself. It does not cause the Hang Seng to surge. In fact, right now we are trading at the lower end of this morning's trading range. So this is again has bearish implications. So that means we will have to prepare, okay, for the possibility of lower prices in the Hang Seng. The same thing is going to be also possible in the mainland equity index. This is the CSI 300. Again, the 4,169 was on the back of better than expected Q1 GDP numbers on the retail sales in China. And since it's all one-way street, which is down, okay, from 4,169 you went up to a low of 3,925. So you can see this is quite a big drop here on the back of very, very positive economic news. So this can be good. And of course, this morning we have a bit of a rally piggybacking on the strong momentum closing on Wall Street. Let's see whether it can sustain. We are in the early part of trading, so let's see in the second half whether it can maintain this momentum. Over in energy prices, we see crude oil basically now is basically treading water. Okay, the high of $83.49 has come down all the way to $74 overnight. This compared to Wednesday low is marginally lower, but there is no sign the market is about to find a bottom. So we will have to see. So if the reason for the equity prices to rally is because of a visible contraction in U.S. economic activity represented by the Q1 GDP number released yesterday night. That would have global implication because if the U.S. economy slows down, now that's important because the U.S. is by far the largest economy in the world. If the U.S. economy slows down, and then the rest of the world may actually follow suit. And if we have that, then we have a global recession. And if that's the case, demand for energy products will be curtailed. There will be less demand for energy prices. Thus, is also going to be translated to lower energy prices for crude oil. So whether or not we have found a bottom in the crude oil for the time being remains to be seen, but there's no evidence that it has. So we will have to prepare for the possibility if there's going to be a rebound. This is possibly a sell rather than a buy. Okay, do watch out for that. And over in the gold market, we can see gold is not really reacting very, very much. Okay, on Wednesday we have a surge, a spike, okay, to $2,009.40, which is within this bracket of prices. I think it's going to be vulnerable to selling pressure. That area is $2,009 to $2,015, and true enough, market went up to a high of $2,009.41 and has been going down since. Now, it has not broken out of its recent range between 2012 to 1,969.30. So basically, it is trading between these two extreme prices. So the market needs to break up to the upside or break down to the downside to give us a new direction. Nearby support, if the market breaks below 1,939.3, okay, is possibly back to the point of origin, which is $1,950 before the market surged to the year high at $2,048.80. So again, by and large, the market do come down. Watch out for some kind of support around 1,950. If this level fails to hold, then the next level in which I'll be interested to go in and buy again will be a 1,914 to 1,933. So this is actually my ideal price to buy. Okay, we will have to see whether that is the case. Now, over in silver, we also see not much of an activity. We basically sideways. Market traded at a high of $26.09 and has gone down to as low as $24.49. That about the market since has gone into a sideways pattern. Now, while the market, if it goes higher to $25.30, that about does seems to be like a selling opportunity. Please do not sell this because we have seen this year silver has outperformed gold by a wide margin. So if there's going to be any weakness in precious metals, a better bet is to sell gold and not to sell silver. In fact, if the market actually goes up and come back down to $24 or $23.70 thereabout, that will be the first time we're going to get a break in terms of a market pullback to allow us to buy silver. You can see all the way for the market low of somewhere around $19 plus, we went all the way to 26 without any break at all. So the market has been very, very strong. So this will be the first time if the market ever pulls back to $24 within the range of $23.70 to $24, it is a buying opportunity. Okay. So in dollar itself, we don't see a lot of reaction. Unlike the equity players, people in the currency market are a little bit more realistic. They were not led by the idea that a cut in interest rate is going to be good for currency. Okay, so we can see the dollar has a bit of a movement, but not much by the end of the day. The low so far traded is 100.74, which is not too far away from the low of this year at 100.42. So I still maintain that this looks like a possibility for a three-way rally to 102.30 to 102.60 levels. Okay, so do watch out for this possibility. I'm basically still maintaining a long in dollar dollar index. So likewise, the other currency pair do not see a drastic move overnight. Sterling is now back into this bracket of prices, which I think is making it very vulnerable to selling in pressure. That level is 124.90 to 125.20. Okay, the price right now. This morning high, we have a high of 125.04. So it put it smack in the middle of this bracket here. So what does it mean? It means the market may actually come back down. Nearest support will be 123.45, which has been holding up pretty well. And if the market cannot hold at this level, the next level of support will be likely at 121.80. Okay, but do watch out. Over in euro dollar, which is a surprise because I have always maintained a somewhat bearish view on the euro dollar, but you can see that this week the market went up to a high of 110.95 before it eased back. But by the way, I have been stopped out of my short position because of this spike to 110.95. Currently, I have no position. We'll have to see, because so far I've been watching this black color line, which is my support line for this euro dollar. It has so far been very resilient. There's no sign it has going to break. I have maintained that it looks like it is going to break, but so far it has proven me otherwise. So we will have to watch this again. Okay. Over in Aussie has a big drop from 0.68 to 0.6590. Okay, so this is very, very close to my medium-term target at 0.6565, represented by this green horizontal line here. So downside potential is not much, so I will rather not take a position in Aussie. Okay, dollar yen, I still maintain that the rebound from 129.64 looks to be over at 135.14, and now the market is getting ready to resume its original trend, which is coming down from 137. So we will see if the market will go below 133 and then head towards the 129.65 levels. Okay. Over in dollar Canadian, dollar CAD has been very, very strong since hitting a bottom at 133. It went up to 136.50, a move of 350 pips and more. Okay, now it seems the market there's a bit of profit taking, but not very much. Okay, so if for some reason the market decided to pull back My area of interest will be 134.35, 134.75 thereabout. That could be a great area to position long if I'm still bullish on the dollar itself. So this is an area of interest to me. Over in the crypto market, we have seen some kind of volatility over the last 48 hours. Now, from 27,000 thereabout, market zoom up all the way to 30,000, then falls back down to below 27,200. So this is a big move up, big giant move to the top, big giant move back to earth, all within a span of hours. So this is very volatile. Since then, the market has gone back up again. This last night we seen Bitcoin flirting with 30,000 to a high of 29,887, and then this morning we see a bit of a deflation. Okay, so whether this is going to signal another rally in the Bitcoin market, it's hard to say because of this particular move here that actually muddled the waters to the point where it's totally unclear whether it is favorable to the downside or is it favorable to the upside. So right now, just watch. Okay, I have no recommendation or I have any particular view on Bitcoin for the time being. So this is all I have for you for tonight and for today. So I will see you again next Monday. Bye bye. Take care.